And that sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets one step at a time, top-down analysis style. We go through the news, the charts, the price action, any economic data that's coming out, any information we find relevant, break it down, give you guys some insight so that you can better run your daily routine out there as a trader. Monday, 12/21 and 2020 on a week where we're starting a shortened trading week. It's Christmas this week. I got markets closed on Friday, half session on Thursday. We'll be talking about that throughout the week, but we've got some price action here on a Monday morning that we've got to start with and break this thing down. I got a full crew here today with us. We've got Matt on the back end doing analysis. We've got Mark as well, providing insight and analysis. Coach Emily is here to do the same thing. We got Tanyan on the back end producing. Let's start with Matty. Matt, how are you doing today, sir?
Tim, doing absolutely excellent, and excited to be with the crew to break down the market activity today on a waking up to a Monday, fairly tough day. You go to bed at 2 o'clock in the morning, Tim. The market's doing nothing. Nothing's happening. And you're waking up to headlines that say COVID expansions and lockdowns in London, and the market's down a couple percent, and it's very, very volatile. And you're like, whoa. What just happened in the last 4 hours? Like literally, I slept through the volatility. Like, what just happened? And I woke up to that this morning. Like, what in the world just happened? The market was hovering right there at support when I went to bed. And, I woke up and all craziness was happening. But I'm excited to be here with the crew to break it down. And quite frankly, I think it's a little bit of just a little bit of a spook to the market, a little bit of a scare to the market, maybe a little bit of a reminder to the market that we're not completely out of the woods yet. But I also think there's a little bit of overreaction here.
If you think about it, and we'll talk about it obviously as we go through the show, but we've almost gotten back all the price action from that little sell-off there, Matt. So, it's been a very impressive intraday rally as the cash open even kind of brought the buyers back in. They bought this little dip that came in. We'll break all the technicals down one step at a time. And by the way, it probably was just a headline blip of markets open up in Europe. Maddie's sleeping out here in Salt Lake City, Utah, and then boom, get a little algo-driven news sell-off here, right? And we'll talk a little bit about that. And by the way, a lot of this is due to those new COVID strains that are being reported in the UK, some restrictions on flights that are happening out there. Marky, come on in here for a minute, sir. How are you doing today on a Monday?
Listen, I'm doing great. The nice thing about a cash flow trader, it takes a lot more than that hit to even get my blood boiling. And as we've been talking about with our pro members for 6 weeks now. The multiple layers of support underneath the market. And it's just like watching from a technical point of view. I mean, having various moving averages, having various things. I mean, it takes a real bearish theme, something of significance that spooks the market as a whole. And if that doesn't develop, I mean, you just got all kinds of layers on intraday charts, on daily charts, on weekly charts, for things to bounce off of. And you saw a clinic in that over the last few hours. Big scary headline. We'll talk about it in a minute. But then support levels came in. And when one failed, another one would kick in here. And then eventually the market finds its footing. It's technical analysis. And it's why, like, from analyzing it from a downside perspective, when you have all of these multiple layers of support, I mean, it always gives me confidence heading into a week, and those support levels at various points are working.
And I understand the point, Mark, but in my opinion, the only support when volatility truly takes place like it did on the overnight action is significant whole numbers. Those significant whole numbers, and I've talked about that in detail many, many times this year, in a world, that we're coming out of with 2020 and the pandemic and the volatility and the lockdowns and the craziness and the themes and everything. I've just seen significant whole numbers play a much more significant role than they typically do. And when I woke up this morning and I'm looking at the market from an intraday perspective, and I'm looking at that volatility, and the market had already recovered a good 40-50 points by the time that I was aware of anything that was happening, obviously. And where did it come into? It literally, on that volatility, it violated short term, it violated trends, it violated patterns, it violated everything. until it hit 3,600, and then it stopped like an Allen Iverson crossover and started switching back up. That is impressive from a strength perspective with significant whole numbers. And just so everybody is aware of the news very quickly, last night, right when the European market started getting into action, right there about 2 a.m. in the market, our time about 4 a.m. in the market, right in kind of the markets getting going. The UK announced further lockdowns in London based on a COVID variant that has increased transmission, and so it's like 70% more increase. And so I think what happened is you started waking up and you started seeing these headlines, lockdowns in London, because think about the last 2 weeks, guys. Everything's been vaccine, 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 vaccine. And as that vaccine, vaccine, vaccine conversation has been happening, the overall confidence levels of people have been increasing to a certain extent as well. And so when that news headline comes out last night, and it's just like, wow, a massive reminder that we still have a long way to go. And that's how I'm seeing this news here today, is just we're not out of the woods yet with this COVID situation. And the market was giving all of us, myself and everybody in the market, a little bit of a gentle reminder today that we still have a ways to go here. And so, but when you're looking at the price action here, I don't see this as massive consumer selling. I don't see this as institutional selling. I don't see this as anything other than algorithms. Look at the time frame this happens last night. That's number one. You're really happening in the middle of the night on a Sunday coming into the Monday cash open. Nobody's really trading that price action. That's algorithm based. When you look at the volume on the sell-offs, yes, we did see a slightly increased volume on the sell-off on the overnight action, but you compare that against the cash open and what we typically see in the cash open, that is extremely small levels of participation. So nobody's really participating in that downward movement in price. Nobody's selling their Apple stock. Nobody's selling their Google stock. Nobody's selling their Amazon stock. Nobody's selling their Tesla stock. You're seeing the volatility in the S&P 500 getting pushed down, down, down. But who's doing that? Again, is that the institutions on Wall Street? No. Is that the consumers around the world getting scared because of the headline? No. Are they immediately buying it back up 2 hours later because now they're confident again? No. That is all algorithms. And so I'm taking what happened in the last 24 hours, and really not the last 24 hours, but really the last 6-7 hours. I'm taking that as a gentle reminder that we are not out of the woods yet regarding the COVID situation, but I'm not putting too much emphasis on it, especially when you start looking at some of those sectors. Tim, take a look at utilities for a second, and we'll take a look at the sectors here in just a little bit in the show. But you take a look at utilities. Yes, I'm a complete stay away from utilities, but we were a stay away from utilities before this occurred. Nobody was looking at picking up utilities at $62. And if you were, I apologize for putting you on an island, because that's who you were. You were an island on that. Nobody else was looking at that. But take a look at technology. You take a look at XLK here. What happened with this with that drop? Well, that drop just brought that right back down into that 125 level, right where that 50-day moving 20-day moving average is. I hate the color scheme of your moving averages. And now you're looking at a hammer candle coming off of support. And so when you're looking at this type of volatility, yeah, it's a little spooky initially until you start understanding the context around what created the volatility. And then when you look at and then when you start looking at outside of the broad market, you look at this and you say, yeah, I'm already staying away from utilities. I was a little hesitant on, buying technology up 5-6 days in a row, showing me a little bit of weakness at the top. Now we're snapback retracing, coming into a support level with a hammer. It's go time again. So I think there's obviously, again, there's a lot of headlines out there. I think it did spook the market a little bit, but I don't think it's anything crazy that we need to be overtly concerned about unless patterns are breaking in sectors. Utilities, I don't see patterns breaking. I see patterns continuing. Here in technology, I don't see patterns breaking. I see patterns continuing. So whenever you see volatility like this in the broad market, yes, it can give you a little bit of a shortness of breath a little bit. Like, ooh, what just happened? But break it down from a sector perspective. Did trends get violated? If yes, then you have to update your philosophy a little bit. Did patterns get violated? If yes, then you got to update your philosophy a little bit. Right now, we're in that zone where we're trying to see what sectors are going to find support and what sectors aren't. Right now, I'm seeing this as a buying opportunity.
Mm-hmm. Marky, on the news of the new COVID strain out of the UK and the headline risk that came out overnight, and Matt did a really good job detailing the time frame, the volume that came in from that. And I do agree with Matt. Been a very impressive response since the cash open, almost back to where we did break that thing down. But Mark, what do you know about the news itself? I mean, I'm reading from all kinds of different experts saying the new vaccine developments that have been happening with Johnson & Johnson and Pfizer and Moderna, all of these strains should work on whatever this new thing is, as well as just an increase in the transmissibility rate. But Mark, what do you know about this new strain?
Well, okay. One thing we know about viruses is they mutate. That's normal. That happens. COVID will mutate to different variations from now to the end of time. That's how viruses work. And oftentimes mutations, while it's a very scary word, right? It's a mutation, brings up all kinds of Walking Dead images. Mutations can also work the other way, where the virus becomes more benign. So viruses mutate. That's a constant. We know that. And I've tried to dig everywhere I could because I am a sky is falling kind of guy. I'm always looking at what could go wrong.
You look for worst case scenarios.
I do.
Right.
And I have not been able to find a single thing that points towards the virus impacting the vaccine at all. And so as long as vaccines work on whatever the mutated strain is, it's sixes then. It doesn't really matter. Now, whenever a mutation has a higher transmittability rate, obviously the people in that area where the higher transmittability rate occurs, the lockdowns are warranted because it will. I mean, COVID already has a ridiculous transmittability rate, and even a higher one with that. But as long as, from a market perspective, it's all about vaccine, it's all about a return to normal. As long as any mutation doesn't impact that, then it's kind of a one-off event. Market will forget about this by New Year's. But obviously you keep an eye on that, and it is a reminder that, hey, we're not, as Matt said, we're not out of the woods. But right now, this feels a lot like a one-off event unless we get more information. It certainly does not feel like
it is early on
really
this.
Fear, so.
I mean, it is early on this, and we all need to be open-minded to, being aware of all of this information that's coming out. But as of right now, Mark, I'm with you. Like, I scoured the headlines to try to find some negative reaction, and honestly, it was really just the headline news. Mm-hmm. More than anything, it was just the headline news. And to see the snapback recovery that has pretty much recovered most of that price action so far, I think you got to take it a little bit with a grain of salt.
Yeah, I mean, one of the things that I always gauge any event on is when I wake up and I have my 100 stocks I follow that are diversified, and when I see a sea of red where everything is down almost, then I'm like, oh, there's real fear in the market. I didn't see anything close to that. I saw indexes down, but the underbelly of the market, the second underbelly of the market, things were very healthy. Things were spread out. So there's no real fear out there right now.
And to go on your point, Mark, Tim, pull up a FinViz heat map if you don't mind.
Sure. Yep. Let me get it up.
When you're looking at the heat map here today, Mark, and you're right, when you see those real big down days that really have some volume behind it, that really have some concern, you don't see a shaded color of a heat map. You don't see Microsoft up 1.5 and JP Morgan and the banks up, big, and Nike up big on its earnings, and Walmart and Amazon hovering above, and some spotty stuff along. No, you see a massive sea of red is what you see, right? Everything's down. That's not what is occurring here today. What is occurring here today is you had some overnight sellings based on a news headline that spooked a little bit of a fear in the market as we're coming out of this. And quite frankly, we've been a little complacent. And when I say we, I mean all of us have been a little complacent in the market regarding COVID over the last not 6 weeks, but really over the last 6 months. And so to see the headline here coming out of the UK, I think it was just a gentle reminder that we're not out of the woodworks yet, and that you still got to understand that there's going to be some of this in the future of random volatility. But it's been an impressive recovery so far here today. And you know, what's interesting though is how in the world is not everybody talking about the new stimulus package that came out of
I know
the
we've been
US
waiting.
government.
We've been waiting for that forever.
My goodness, we've been waiting for that for literally ever, and COVID took the headlines here today. Wow.
It sure did. And by the way, I'm grabbing a chart, bringing it over to this screen. But Mark, let's give the update on that stimulus because they're talking about it even here today.
I got the update.
We knew there was a deadline on Friday, Matt. So much for deadlines.
Yep.
They always just miss them and move them. We know this about politicians, not just in the U.S., by the way. They've been doing that with Brexit forever. We complained about that. But they did move that deadline up to Monday, and it looks like they're going to hit it.
We got to find a different word than deadline when it comes to politicians.
Because it doesn't fit. That's it. I mean, they ignore them constantly. So yeah,
it's not a deadline.
Yeah.
Like I'm a man who works toward deadlines. So like deadlines are very important to me. You give me a deadline on Friday, I swear to God, it's getting done by Friday. Mm-hmm. That's a deadline, right? Politicians, we got to find a different word. So Team Tackle, if you can find a different word that better fits a political deadline, I would love to hear it. But you know, Tim, major news coming out of Congress here today. Let me give you the headlines. Congress passes a skinny bill.
Mm-hmm.
Okay, that's the headline. In an alternative universe, here's the headline. Congress passes the second largest stimulus bill in the history of the United States. Think about that.
That seems like the more appropriate headline.
$900 billion. $900 billion. Now, not a lot of shock in that 900 billion. There's not a lot of fat in that 900 billion. You're looking at, and I'm going to just go through some of the bullet points here that's coming through the bill. There are going to be $600 stimulus checks going out to individuals. Now, I do not know the exact tax bracket or income levels for those individuals. Earlier this year, though, they were capped at certain levels. We do not know exactly what those levels. At least I don't know exactly what.
I read $75K for an individual, $150K for both.
But that was the previous one.
Yep.
They have not yet agreed to that yet. So there is still some of the detail that needs to be agreed to, but none of the detail is concerning enough to stop this bill. This bill's going to get voted on. And what do we know about McConnell, Mark? He puts things up for a vote. He usually knows it's going to pass. In fact, the only one I can remember
the John
McCain shock.
That's the only time I can remember either.
Okay, so I think you and I can pretty much lock this one down, right? McConnell put it up for a vote. It's going to get passed.
Okay. They want to go home for Christmas.
Now, eligible families, and again, don't know the exact parameters around that, will have $600 per child as well. The first bill was $500. They did increase that by $100 to $600 per child. Again, that's for eligible families. We do not know exactly what the parameters are for those eligible families. It's probably going to be fairly similar to what it was last time as well. Unemployment benefits, the enhanced unemployment benefits, an additional 11 weeks of $300 additionally per week for unemployment individuals. That was $600 last time. Everybody knew for a very long time it was going to be $300. That's where it comes in at. Small business loans, they're reopening the PPP program for those small businesses in America that are really struggling right now. They can apply to get a second loan, not just the one loan. So small businesses are reopening so that they can get that bridge loan to bridge the gap between right now and, again, just with what happened with the UK. We know we're not out of the woods yet necessarily. Tough lockdowns happening in the UK. What if that happens here in the US? A lot of the small businesses, which are the backbone of America, we know how much they've been struggling in America in 2020. They can get funding to bridge from now to when we do get to some degree post-distribution of the vaccine. Funding for schools and childcare, $82 billion for K-12 and universities. $10 billion for childcare. Vaccine funding was up to $20 billion. What is not in the bill? State and local government funding. Democrats wanted $160 billion in additional funding. They did not get that. Remember, a lot of what's happening right now is they are doing the things they staunchly agree upon. They're looking at hitting some of those more things they disagree on next year after the presidency, after the inauguration on January 20th. So as of right now, we know what's going to be happening over the next 3 to 4 months. Now we move on.
Mm-hmm. Marky, what's your read on this stimulus situation? Like Matt talked about, second largest bill in the history of the U.S. Matt, is that what I heard you say?
It is the second largest stimulus bill in the history of the United States.
But they had to
wait, hold on. Let me give you an alternative headline. The second largest stimulus bill in the history of the world.
Wow.
Listen, all I know as a bullish cash flow trader, I've enjoyed about 40 stimulus hope negotiations over the last 3 months. I'm going to miss those headlines. That's my take on it.
Oh, bro, they're not going away. There will be more. They will keep talking about more bills down the road. I don't think you're going to completely be void of those.
Well, I look forward to that next run, though, because I swear, I mean, I have no idea how to quantify this, but if you calculated all of the up moves on hope of stimulus, it's been pretty healthy over the last few months.
Mm-hmm.
Oh, Mark, I look forward to a month from now when everybody's like, where's the next stimulus? And everybody's like, well, the hope will start again, brother.
No, and from a political theater, and this is a significant thing in 2021, it will be interesting to see how many votes does McConnell have? How much does he have to negotiate? He might be in a position, because during the Obama years, he was like rock solid. I don't know if he can be that rock solid as an obstructionist. I think he might have to do more of a negotiation and deal maker like you saw over the last couple of weeks, which would be good for the market.
It depends on the Georgia runoff to a certain extent.
Mm-hmm.
Like, it really does.
Like if he's at 51 versus 52, McConnell doesn't have a lot of leeway. There's 4 or 5 Republican senators that don't necessarily agree with Mitch McConnell on many things. And so if he has 52, he can strong arm. If he has 51, not much. And I know for other people, they're like, it's just one. It's not that big of a deal. When it comes to these types of bills in the Senate, it's the difference between major legislation and not major legislation.
Correct. Yeah, I agree with that. And it sounds like, Matt, and are they finishing that today? Is that they're voting on that?
From what I read, they're voting. Yeah.
Yeah. Let's take a look at all the different indexes, guys. You tell me if you're seeing anything from a relative strength or weakness perspective. And we got a 1-year daily chart on these indexes. The Dow actually, Matt, we got to come all the way in to see this candlestick, but you'll notice a really, really strong lower tail. Some of that is going to be out of the strengths of individual components. A few of the banking components in the Dow doing pretty well today, as well as Nike, I believe. We're looking at a breakout up here, 30,300. Matt, what are you seeing in the Dow here?
Honestly, like I said earlier, it's really when volatility hits in the market like this, Tim, and you're seeing support getting violated. It's really about, do patterns and trends get violated? And right now, you got to be looking at that wick. And obviously, you're saying, well, Matt, man, it came down under 29,750 and 29.50, and came down to 20. Yeah, all of that. Wicks don't necessarily matter. That is overnight action that not a lot of people care about. I'm looking at the actual body of the price action, and really, if you discount the wick, nothing has changed on this potential breakout in the Dow Jones.
No.
You're still looking at an ascending triangle. You're still looking at a horizontal resistance pivot that when broken out of, you're talking about confirmation of a next leg up. And so, to me, nothing really transpired here on the Dow Jones outside of the volatility on the overnight action. Nothing really truly to update from a price action perspective.
Yeah, I'm seeing that same thing as well. In fact, this cleanliness of the potential breakout is right in play, in my opinion. The NASDAQ, obviously, it's been such a juggernaut here recently, playing catch up. It underperformed there for a bit, then started to really heat up after that, kind of movement in November when the market started really accelerating. Matt, we've got a little red candle up here, a little different pattern in a couple of regards. The tail of that hammer actually did not even go below moving averages, rising
Well,
20 period MA here.
I don't want to move necessarily on from the Dow yet.
Okay.
I want to take a look at a couple of the Dow components very quickly. And obviously, some of these components in the Dow will be part of components in other areas of the market. But take a look at Apple for a second. Obviously, the number one company in the stock market, and the participant in the Dow and the other indexes as well. But when you're looking at Apple here, and again, it's been a volatile, crazy day. It's been a volatile, crazy last 6-7 hours. Who's not interested in buying Apple right now?
I like it a lot. I mean, the breakout last week was clean. It's got a lot of positive sentiment behind it. Now it's kind of a little bit of a flag pull back into that zone.
You
I
got a
think you got to
hammer
be
candle
interested.
sitting on a rising 9 EMA with the candle
Yeah.
hovering right above 125.
Well, and I'm already long. I'm
Like,
not going to do
no,
anything
no,
else with
I
that. So,
know, but
yep.
and that's what I said. Like, I know a lot of people are already long, but the people that aren't long, they're looking at this saying, well, I want to
Mhm,
get long too.
mhm.
And the people that are long, they're not exactly like, I want to get rid of my Apple.
No, nothing about this would shake me
Like,
off of the position trade I'm in.
okay, so you take a look at Apple and you're like, yeah, I want it. Okay, right, let's take a look at Amgen then, AMGN. Okay, now Amgen here, another Dow component. Were you interested in Amgen in any capacity before today?
No.
Did today change any of that analysis?
Mm-mm.
So today was really just kind of a headline day.
Headline day for
Okay,
Amgen.
Caterpillar. Let's move on to Caterpillar. Nice little Dow component, Caterpillar. Did today's price action change the trend, the pattern, support, resistance in any capacity?
The defense, actually, you probably got to like it even more,
You probably like the defense a little bit more. Let's take a
Yeah.
look at Disney. Disney, high base type setup, waiting for the rising 9 EMA, and all that happened today was the market gap down to the 9 EMA. I'm still looking at the close above 175.
Mm-hmm.
I'm not looking at dip mechanics, but I wouldn't but look at dip mechanics after a 5-day consolidation high base in the first place. Right? You wait for the 9 EMA to catch up, you wait for the breakout. Nothing changed that on Disney. Let's take a look at Dow Chem. Dow Chem. Did anything change the potential breakout of $56?
No, healthy little
Okay.
defense in here, actually. Yeah.
Okay. JP Morgan Chase. On a crazy, crazy, crazy day in the market, the banks are up fairly big and JP Morgan's breaking out of a consolidation pattern. You could trigger above 125 on a continuation momentum. On a truly scary day in the market that isn't just headline scary, none of this occurs.
Mm-hmm. Mm-hmm. And the health out of those financials, obviously, on the Dow is really impressive. If you look at that, I think I read that JP Morgan's actually going to initiate one of their stock buyback programs. Some other good news behind it. But you're right, Matt, the price action, even just thinking about those industrials, like going back probably as we're going through all those charts, that Caterpillar, the defense up here as it's pushing the breakout, couldn't even catch the sell-off as it was running. So I'm with you. I think there is some relative strength and healthiness within the components here on the Dow.
Honestly, and that's what I'm looking at. I mean, you take a look at a couple other components. Take a look at Walmart for a second. Walmart's been a very, very popular company lately. Did anything today change anything in the price action today?
No, still got that deep pullback.
Still got that deep pullback, and it's still consolidating right above 145, right?
Mm-hmm.
So take a look at the Dow candle again. People got to realize on overnight actions in the market indexes, you see crazy things that aren't necessarily representative of the underlying stocks in that index. That is algorithms on that index doing that. You got on days like this, you got to break it down and get a little bit more micro data based. You got to look at those sectors. You got to look at those trends and the patterns. You got to look at the heat map, and you got to do your due diligence to understand what truly is happening in the market today. Because what truly is happening in the market today, not a lot.
Mm-hmm. Mm-hmm. Well, and I just find it so impressive that it's even reclaimed that 30,000 mark all the way up, pushing back up to where we were on Friday here, guys. I mean, we were trading these prices Friday afternoon going into the weekend. Here we are now Monday afternoon. We're trading in the same prices. And you're right, Matt, this was not a part of those individual components price action, because by the time the cash open comes up, it's already kind of recovered some of that, and it's had a healthy recovery since. I love the analysis.
We all focus so much on the indexes. The indexes are a reflection of the stocks there, no doubt.
Mm-hmm.
But on the overnight action, you have to discount some of that.
Mm-hmm.
And let me just chime in here.
Go ahead, Em.
Let me just chime in here real quick. First of all, great analysis on you guys. You guys are doing really good, like explaining all of this stuff. And for somebody who's brand new, this is the kind of stuff that
Your mic went a little bit
just
muffled
went
there.
down.
Yeah. We got you. All I heard was great analysis. I'll take it.
I think
That's all
we
she
can
wanted to say.
we can just end on that, right, Em?
Yeah.
on that. But what I was going to say is that part of part of our daily routine as traders, and if you're consistent with this, is you go through the top-down analysis where you read the news and you go through the sectors, and then you go through your ETFs, and then you go through your individual stocks, and come up with your own bias, your own individual bias as to where you are in the market. And if that hasn't changed, then you continue with where you are. But days like these are days that used to spook a brand new trader, like, oh my God, what's happening? And then you just kind of get thrown off. But like Matt said, it's just like a little spook. It's like a little sneeze. Just forget. Like you can't let that little downtrend that happened overnight that you really weren't even participating in affect now how you're going to go about your day. Your top down analysis and your approach should be the same and constant throughout. And to what Mark said, for cash flow traders, like, yeah, okay, so we had an overnight downtrend, and now it's kind of come back and recovered, and we're not even past that support that it broke earlier. So yeah, you're aware of it, and it's what we've talked about this whole entire time too. And we always give our final thoughts is we know the kind of market we're in, right? And we always say, yeah, we're bullish, but be careful and watch out for these kind of days that are going to happen every now and then.
Mm-hmm. Yeah, and I think that's a really good point as well. You kind of have to just be prepared for it, take advantage of it, and still keep running your routine. I mean, that is the bottom line behind all of it. All right, guys, let's take a quick peek at all of the indexes and kind of start getting into commodities as well. I do want to look at sectors today. Matt, Rut, it's been a juggernaut. Same analysis though. I mean, so much of the price action.
I don't have
is the
anything else to say on the indexes.
Same one, right? I mean,
Yeah.
same basic things,
When
same price action.
When volatility hits, they all do the exact same thing until the volatility subsides.
They all start moving the same
And
way.
the volatility is now starting to subside, which means this was not a real event today.
Mm-hmm. Mm-hmm. It's going to be fascinating to see if we actually can continue the healthy price action through the middle of the day here. Mark, any final thoughts on the big picture before we move into some of the individual components, commodities?
No, the only thought is until you have a real bearish theme, man, you got a million support levels still at work for you. And there's not a real bearish theme on the horizon. One will eventually emerge, but it might be in 2022, in late 2021. We don't know, but there isn't one right now.
Well, and Tim, I said, like, there's nothing here to see, basically, right?
Mm-hmm.
But again, this news should wake you up if you have been a little complacent with your trading, with your systems, and you've been a bit of loose in the last few weeks because of the market activity, and tighten that stuff up, guys.
Mm-hmm. Yeah, I think it's a good wake-up call. Good reminder for sure. I mean, we saw the volatility picking up. There's no doubt about it.
If you've been popping your out-of-money call options like you're a drug addict, tighten that stuff up.
Start tightening it up. Be aware that you can have down days for sure. Matt, I do want to look at sectors at some point today as well as commodities. Which one do you want to go to next, do you think?
Let's take a quick peek at the sectors from a technical perspective very quickly, Tim.
Okay.
Let's start with the basic materials here. I don't want to spend a lot of time on it because I've already talked a lot about indexes and broad market mechanics and top-down analysis enough, but very quickly, excuse me, basic materials here, a little bit of a gap down, hovering right underneath that, right above north of that 70 support level. We know the significant number of that 70, nothing really to update. You're still looking at a stagnation neutral trend, and nothing really to see here until we see a breakout. So keep an eye on that breakout channel, and really what you're looking for on the breakout there is right there about 72.40. That little wick you see at 72.41, that actually does coincide with that overhead resistance. So look for a breakout of that 72.40 level. May happen this week, may not. It's been consolidating for the last couple weeks. The longer it consolidates, the stronger I'm going to like that potential breakout when it does occur. But also, no front running. Consolidation is real. Resistance is said multiple times. This is not a high base scenario in a momentum pattern where you're alpha. You're looking at that alpha 9 pattern and you think you're the alpha in the alpha 9 pattern. You're not. We've had consolidation. There's no front running in consolidation. So wait on that potential breakout. The twin sister, which is no longer the twin sister, we got to stop calling energy that. Energy is its own little beast in and of itself here. Energy getting smacked really, really hard on demand concerns with oil itself, but really you're seeing the same type of headline news take hold. But energy, unlike a lot of the areas of the market, energy was one of those juggernauts post-election. Saw a little bit of slowing momentum in trend. Energy, unlike materials, trend pattern were violated. You got to be looking at this now as more of a neutrality scenario. You're not looking at dip mechanics, in my opinion, on energy. You're looking at seeing if this is a shakeout day or if this is something bigger in the energy sector. You know, we talked about energy last week, Tim. Energy is something I'm fairly, I don't know if I'm bearish on anything over the next 10 years.
Mm-hmm.
I'm just not bullish on energy over the next 10 years. And so probably a little bit of a shy away in that euphoria we saw from second week November all the way throughout November. That momentum is over. Energy had its day. It might have had its week. It might even have had its month. And in the last 3 years, that's enough for energy. Everybody's now moving on. And so, well, let me put it like this. I'm moving on from energy right now, and so should everybody else. Let's give it a little bit of time to see how energy handles this dip, because it's fairly large in energy and it's not in other areas of the market. Let's take a quick peek at industrials here. We took a look at the Dow Jones. The candle you're seeing on the industrial sector is what we're seeing on the index itself. You're seeing the snapback recovery. Now, if we can close above that 88 handle, you're back in line with that consolidation. You're back in line with that potential breakout right south of that $90 level. We'll call it 89.75, right into that range. Give it the zone between 89.75 and 90. Let's see how it performs. I don't think dip mechanics are strong here. I think we got to see breakouts to see the continuation of trends there in industrial. Let's take a quick peek at technology sector. We already talked about the NASDAQ. You're seeing basically the exact same picture in the NASDAQ. Snapback retracement coming into the 125 wick right there on the 20 SMA. Now you're looking at a hammer candle, looking at what can we trigger above. Day traders are loving what they're seeing in technology right now. That hammer candle is strong. When you're looking at that sector, anything above 127.25, Tim, you're looking back at this as confirmation on that bullish flag pattern. And I'm looking at technology this week, and I think I'm not the only one looking at technology this week. So look for from a trend perspective, from a pattern perspective, you do have some slowing momentum in trend. If you'll look at the pivot 1, pivot 2, pivot 3 mechanics, you do have some slowing momentum in trend. There's no doubt about that. You have to take that into account. But at the same time, you're looking at this as a buyer. Dip mechanics are strong right now in play in the technology space. Let's take a quick peek at the next aggressive sector. Let's take a look at the discretionary space very quickly here. Discretionary broke out very similar to technology last week. You had the consolidation. Obviously, with what happened here today, it did violate that pattern. Because it did violate that pattern on the discretionary space, which has been very, very hot recently, look at this above 158.90. If we can get back above 158.90, you're talking about that as a breakout continuation. So let's take a look at that 158.90. Continue to look at that. You see that hovering right underneath that 159 level. You break out back out about you break out of that 159. you should see some continuation of trends and patterns in the discretionary space, especially with some positive earnings news out of Nike and a response to Nike from an earnings perspective here today. You know, discretionary stock in Nike. Let's take a quick peek at Nike. Nike, you know, has been a very, very strong stock. Nike reports earnings of 78 cents a share, 63 cents on the expectation, 11.2 billion versus the 10.6 billion on expectation. So nice healthy beat on EPS numbers, nice healthy beat on revenue numbers. Revenue came in at 8.9% year over year as well. The company's guidance was in the low single to low digits, but you're looking at a high base type consolidation breakout of 140 on that, and you're looking at, you know, without the market volatility today, you might see a little bit of a green candle here. Let's give Nike a few days. Let's give the discretionary space itself another day or so to kind of reestablish those trends and patterns to see what happens. But I do see a lot of positive things happening in the discretionary space. We'll see if that does have the legs in continuing, and Nike's performance on its earnings numbers here today should definitely help the continuation of that bullish theme that's been happening in the discretionary space over the course of the last month and a half or so. Taking a quick peek at some of the other sectors out there, let's move on to communications. Communications, interesting, obviously a very hot area of the market post-election, consolidation, double top, double bottom mechanics. I don't think that's an M formation. I got this more as consolidation. M formations have a little bit more V-shaped type analysis, not U-shaped type analysis. You have more U-shaped type analysis here. I see this more as continuation here, which means on communications, you're still waiting on the breakout the same way we were waiting on last week. And so again, looking at a lot of these aggressive areas of the market outside of energy specifically, there's really nothing to see here from a trend and a pattern perspective. I do think we need a couple days to see these sectors kind of shake up and start separate themselves like they have been doing in recent history. But when any increase in volatility happens, the entire market will do the same thing. But again, it only lasted for less than 2 hours. I think Star Wars had less time than that.
Yeah. You could have gotten
a very, very, very short time frame. Take a quick peek though at some defensive sectors traditionally here. Let's take a look at healthcare, Tim. Healthcare. Now, personally, I don't consider healthcare or finance defensive. I got both of them as aggressive. But looking at healthcare, again, trend pattern, yeah, maybe a short-term violation of the high base coming into the cup and handle pattern. Now you're looking at this more as net neutrality, but regardless of if you had it as a cup and handle coming into a high base breakout, or if you had it something else, nothing changed here today. You weren't looking at trading underneath 113. You're under 113 today. Nothing has changed in that analysis. So keep an eye on the 113 breakout. I don't see anything changing outside of that. Take a look at finance though. Finance had a couple upgrades in their sector that certainly gave it a little bit of an additional ump here today. We took a look earlier at the JP Morgan chart. Nice little breakout play. Again, what has transpired? A lot of negative headlines here today, Tim. A lot of negative headlines in the price action. Nothing to see. Keep an eye on 29. Any breakout at 29, you got to be looking at finance for some degree of price appreciation. And real estate and utilities, I could care less about, and neither should most people.
No, I need deep dive on real estate right now. Mark, come on in here. No, I'm just joking.
Listen,
obviously there's not much.
I could have spoke really, really intelligently on real estate a year ago. I can speak really, really intelligently on GMO salmon fish company spec plays in 2020 at the end of it. So
I see. So the REITs are no longer grabbing your attention, is what I'm hearing from
dude,
you.
that is the old Mark. Millennial Mark doesn't care about it.
Millennial Mark doesn't care about the dividends and everything.
Why would Mark care about a dividend when he could get growth out of SPACs?
Hey, listen, listen, the REITs. I mean, come on, Grandpa.
Has anybody had more transitions in 2020 than Mark?
I
No,
became a different human being.
on a weekly basis.
On a weekly basis.
Yeah, absolutely.
Yeah.
Marky, let's get you in here, do some of the commodity analysis. Obviously, over the weekend at Tackle Trading, you do our commodity report for us. You help everybody out there understand what's going on across the different areas that we track. Let's start with crude oil. Mark, obviously, it took it on.
Listen, holding the 9, but only by a smidge. Listen, we've had 30 plus trading sessions above the 9. It's been one of a big, huge stretch of momentum. COVID, and this is something we've talked about a lot in the last month. Like, there's so many different ways to play this. COVID is normally a very negative headline for oil. Lockdowns, very negative headline for oil because it just weighs on the entire demand side of oil. As long as those lockdowns headlines are there, I mean, these kind of days, oil is susceptible. It is susceptible. Now, if we get a true, genuine reopening, that's definitely something that oil is going to enjoy. But I wouldn't be surprised you see some sideways trading action here in the next few weeks as the oil markets, which has been really had a nice run. I mean, I know, going from 35 to 48 doesn't seem anything for a hot momentum stock. For a major commodity like oil, that is a big run up. Wouldn't be surprised to see some sideways trading action in the next little while.
The dollar next here. Obviously, we've been under pressure for quite some time, Matt. We're on the cusp of the second largest stimulus bill in the history of the world. I like saying that more accurate headline. I think it reflects what we're dealing with here. Matt, any read on the dollar here? We've had some volatility this morning. Obviously, it jumped up as the market was selling, but it's given it all back. Mostly, what's your read on the dollar? If any, Matt might have stepped away. I don't have my chat. Marky? Yep.
I spend dollars. Like, listen, you're getting like I buy McRib costs $3-4. There's my dollar analysis.
We got to immediately move Mark off any currency analysis. I'm sorry for stepping away for a second and giving the world that level of analysis. I deeply apologize for stepping away in any capacity. It will never happen again.
Thank you.
Regarding any dollar analysis, because the world does not need what they just heard. Now, regarding the dollar specifically, you're looking at obviously a little bit of volatility. You do have some slowing momentum in trend. Now you're coming back and you're testing that 9 EMA from a technical perspective. You're still bearish and you're still fairly bearish on the dollar. Obviously, it goes without saying with what happened in the UK today, you're going to see a little bit of violations in short-term trends. That's why you're seeing a little slowing momentum in that movement in the dollar. Again, the dollar is going to be at 24 on the UUP. Just give it some time. It found a little bit of support at that 24.20 mark. It certainly got help today with what happened in Britain. But again, look at what's happening in the market recovery today. You're seeing the exact same thing happening in the British pound here today. So if you take a look at GBP/USD, you're seeing a strong breakout candidate from last week, broke out. Obviously, the news today violated that. But you want to talk about wicks there, look at that wick in the pound. And so, yes, the dollar is recovering a little bit in the short term, but anybody betting on a long-term, bet on the dollar, good luck to you. Truly, I wish you all the luck in the world if you're going to bet on the dollar. That's not me. In looking at this right now, you're seeing a little snapback recovery on the dollar, but what did it run its face into? It ran its face into a decreasing 9 EMA in a momentum trend. I like my side on the bearish dollar side. So will this continue? Look at that 24.5 level again. Look at that from an intraday perspective on UUP, a violation of that. Look at that downward movement in price. Dollar is going to continue to go down, in my opinion.
Hey, what do you think, Matt, out of a report out of Bloomberg that Janet Yellen is going to be a strong dollar advocate as Treasury Secretary?
Based on what history or analysis?
That's the traditional role of the Treasury Secretary.
Oh, that was Mnuchin's role?
No. Listen, okay. I'm just trying to buy another minute to do my task while you talk.
I see what's going on.
I'm not giving this to you. I knew what you were doing. I'm not doing it. No. Based on what? If you want to give me some analysis, I'll give you an opinion. If you can give me why anybody thinks she would be a strong advocate for the dollar.
It was a real headline. I laughed at it when I saw it. I was just like, yeah.
Listen, there was a real headline that says COVID's going to expand to the rest of the world here today. Doesn't mean it's true.
Yeah. Janet Yellen.
Tim, how many
strong
times
dollar
have I
advocate.
said people should not read headlines?
Oh, all the time.
They're not representative of any actual what's in an article. So, no, Mark got what he wanted, though. He got me complaining about headlines. So
he sure did. He sure did. Let's move on to gold here real quick, then Bitcoin. Then we got a couple individual stock news here today on the first trading day of the week of a shortened trading week. Welcome out, everybody. If you're watching our show right now, we love you. We appreciate you. Click that thumbs up button. Let's help get the word out. Hashtag Team Tackle in the chat. And if you're brand new to our channel, click subscribe, click the bell, and come back and join us. Whenever the markets are live, we go live 12:30 Eastern. Maddie, gold reversal here. Obviously, we were looking at some of the healthiness of this higher pivot low. It started to peek its head above that old moving average right there. Matt, what are you seeing in gold here?
Hold on real quick, Tim.
Marky, you first then.
Listen, I mean, gold there's been some constructive elements to gold recently. Old support level that broke. Well, it got violated. Old support did not act as new resistance, which is a technical win for gold. We cleared some moving averages, technical win for gold. I mean, so there are some things that have definitely stabilized the price of gold, which is huge for anybody cash flowing gold. Like that, those kind of signals, they're massive. So, you know, we now are in a position where there could be, we don't have as many resistance levels. And whenever you don't have resistance levels, all it takes is a little spark. But at a minimum, these violations, the old support not acting as new resistance, clearing some moving averages, setting some pivot highs, setting some higher pivot lows. I mean, these things are all very constructive, and it feels very normal for gold. I mean, gold is not, outside of that few week period, a momentum trading vehicle. It's a sludge fest normally as it works its way higher.
Maddie, anything you want to add to gold here?
Yeah, I've said for the last few weeks that the chart you're looking at on the gold is not actual gold. The chart you're looking at is actually UUP. And when you see the violation of 2450, that's kind of that indication that the dollar is going to continue to go down, and that battle on the 200-day moving average that we've seen on the gold chart is now gold is winning that battle. And so why you're seeing constructive behavior on the gold chart is because of what we've been discussing on the dollar chart. And so yes, gold has won that short-term battle, and it looks like gold is building some momentum here. On the weekly chart, I really like what I'm starting to see on the weekly chart right there at 1900. I mean, on the daily chart, you got to be looking at gold saying, hey, I like the fact that it has a higher high on the 200-day moving average. I like that it violated the 50-day moving average. I like the last 2-3 days of consolidation right there underneath 1900. There's obviously things to really like about the constructive nature that's happening on the gold chart. But when you're looking at it from a weekly perspective, you're seeing that same type of thing. But now you're looking at that breakout of 1900, and you could certainly see the short-term traders versus the longer-term traders looking at that 1900 level, especially with what is happening on the dollar, saying, hey, listen, we're looking to add here, we're looking to initiate here. But the gold chart is becoming more constructive. There's no doubt about that. But I think that a lot of that is because the dollar chart is becoming more constructive as well.
And this is the ultimate level I've been watching myself here is this 1900. I need to get a close up here. It kind of would take out any falling wedge type of conversation if you're having it from a technical perspective. Yes, the daily chart constructive here recently, and obviously in that inverse relationship against the dollar is kind of why it's been poking that way. Last one here, and then we got a couple of company news items. Matt, Bitcoin, just a tremendous run. Last week.
I wasn't even here.
I know, brother.
I've been calling that 20K breakout like 3 days before the 20K breakout. I posted it in the Facebook group. It was after the gap up last Monday. It was after the gap up and then the consolidation. And I said, this is a no sell for Bitcoin. Nobody wants to sell.
It was right
and
here.
I posted in the Facebook group. I said, get ready for that 20K breakout. And then it happened. And then I wasn't on the halftime report to celebrate with everybody. But wow, what an amazing run for old Bitcoin in the last few days. And obviously now you're at that 24 to 22 level. You're overextended. And anybody who says, what do you do now on Bitcoin? Well, you should have been in the halftime report for the last 3 months. That's what you should have done. That trade's over, guys. You got to recognize when a trade's over. That trade's over. And it was a quick trade. Now, the holders, they're never holding. I mean, they're never getting rid of anything. I do think you got to wait for a little bit of a constructive technical analysis right now. Bitcoin's very volatile over the last 24 hours.
Well, even just the last 72 hours or so, before Thursday and Friday, you started to see the volatility pick up. The last 24 hours, it tried to break out, then it tried to break down. I mean, we're having an expanding range here, Matt. Yeah. That leads for really difficult short-term technicals when you have this kind of volatility.
It does. And obviously, these types of breakouts are going to be widely discussed in the social conscious. There's no doubt about that. But, more than anything, I want to talk about Bitcoin here today because there was an interesting Twitter exchange. I wonder if anybody on the halftime crew actually saw this Twitter exchange. I did not see the Twitter exchange. Somebody I follow was talking about it. But apparently, Tim, somebody, and I want to get Mark's take on this as well. Some Bitcoin enthusiasts basically promoted an idea on Twitter to Elon Musk of Tesla that he converts some of the cash positions on the balance sheet into Bitcoin. And Elon didn't just shoot it down. And not exactly endorsed it.
Well, and I know you got a lot of the news to give on this one, but I do want to throw his name in here because he's not just some Twitter nerd, he's not just some Bitcoin guy. Michael Saylor runs, a hedge fund, and he's one of these big brain dude. And he's also, I guess, from everybody's account, highly intelligent. He's one of these super brain guys, so.
When I said Bitcoin enthusiast, did people think that I meant like?
Well, I just wanted, this isn't just some Bitcoin guy talking to
like
Elon
some
on Twitter.
Crackpot talking to Elon. Dude, Elon doesn't respond to that. I thought that was just part of the understanding of how Elon uses Twitter.
No, this is a big brain guy with a lot of money and a lot of backing. Yep.
Like my daughter would say, he's got a big brain.
Got a big brain.
Got a big brain. But Mark, it was interesting because, Elon did not shoot it down. And, we've seen companies, especially in Silicon Valley in the tech space, do this type of thing with Square, with PayPal, with others. What would that mean to Bitcoin, Mark, if somebody like an Elon Musk
it's a weird version of the same institutional adoption theme that's been driving up Bitcoin this entire time. So like the more once again, trading and investing is this, hey, more the merrier, the more on the bandwagon, the more support. It just would be just another peg in the institutional adoption, bandwagon.
I think he's already.
And it actually might turn Tesla profitable without EV credits. Tesla doesn't make cars; they just buy Bitcoin and sell EV credits. That's what they do.
I get the joke. They also do make a few cars, but I'm with you on
some
this.
Cars.
Matt, I gotta tell you what this reminded me of.
Yeah.
I don't know if you remember this. You will when I bring it up. But remember in 13 or 14 when Greece was going through the situation they were going through?
When Mark said what he did, I was like, oh, Mark, he must have read my letter I wrote to Varoufakis.
Yeah. And you actually came out and you said, listen, Greece, if you just get rid of all of your euros and all of your drachma and convert everything to Bitcoin, you'll have a more stable currency system. If they had done that 7 years ago, Matt, you'd be looking at a very different Greece right now.
Greece would be the richest country in the world.
Yeah.
But he didn't read my letter because only my community read my letter.
That's right.
But I did write the letter. I wrote an open letter to the finance minister of Greece as they were going through the next the next stage in the Greek debt crisis. And there was some discussion at the time. They were taking a $5 billion loan from Russia, and they were basically credit card swapping with the IMF, the ECB, Russia, America. I mean, it was just terrible. And as I said, you should default on all of that, not go back to the DROC. That's a trash currency. Just embrace Bitcoin, and you'll be out of this nightmare you call, austerity measures from Germany. And yeah, maybe they should have read my letter.
If they would have done that, just think of the incredible
I
nature.
think I
it
think
would have
like
been something.
I think I only had a reach at the time of like 300 though, so I'm not sure he did.
Yeah, yeah. So could Tesla convert their USD to Bitcoin in some weird move?
Yes,
They,
Tesla could, but what he and again, I think Elon's already an adopter. I just personally do.
yeah.
I have zero evidence of that, by the way. But it would be big news. I mean, it would be the biggest name of the bunch to embrace something like this, and obviously would further the social conversation on corporate adoptability of adoption. And so, whether he does or not, I don't know. I just found it curious that there was actually discussion on it, and I found it curious that Elon did not just shoot the idea down.
Yeah. Mark, mass adoption seems to be the theme here with Bitcoin recently. The price actions held up even through the last little bit. What's your read on all this, Mark? The speculation around Elon Musk and Tesla and just more conversations about what role Bitcoin can play. These are bullish backdrops, aren't they?
No, listen, until I see, because once again, I've become a theme guy, and it's all about themes, and the adoption theme is a strong one.
Mark, you must step away from your mic there.
No, sorry, I had it up. Sorry. So I become a big, huge theme guy. The adoption theme's been a huge, massive theme. Until I see that theme break, when I get really good technical signals, I'm going to add exposure. Now I got to get a good technical signal. Combined, I'm not going to just blindly, oh my gosh, because I'm not that. I'm millennial, Mark. I'm not lost my mind in everything I've learned in the last 15 years, Mark. And so, I'm going to wait for good technical signals, whether ideally a pullback or a consolidation breakout. We had a good one last week. We've had several good ones over the last couple months. Wait for my next signal.
Bitcoin's a trading vehicle for me. It's not an investing vehicle for me. It is an investing vehicle for you too, though. And in different ways, Tim. You direct to Bitcoin, Mark. You secondary market through Riot and other instruments like that. RBTC and whatnot, or GBTC, excuse me. Did the breakout of 20K or the Elon conversation on Twitter, does it give you more confidence in holding? Does it make you want to add to the position? How are you approaching this as a holder perspective? Because that's not my mentality on it.
I'm probably in between the two of you. Tim's the real holder. Yeah. I'm playing the theme. That's what I'm doing right now. I'm willing to cash flow some of those instruments if I get.
So literally, this is swing trade, position trade, investor analysis, right?
Yes, I'm more position trading. Okay. You're more swing trading. Tim's more investing. So, right. So I'm not in the investor camp. I just think that the theme is so strong that it can. Yeah.
So you're like, as long as trends and patterns are intact, I'm good.
Yes.
I'm gonna ride the wave until the wave's over. Yes. Right. Okay. And I'm sure you're adjusting through stop loss management on weekly charts and under your moving averages and stuff like that. Okay. Tim, what about you? You've been a holder for, my goodness, I think you were 15, 16 coming in. Yeah. You held all the way through the 2K to 20K 17 market, the 20K to 3K 18 market, the volatile of everything. You've held through all of this nightmare scenarios, the euphoria, the nightmares, everything, bro. How are you approaching this 20K breakout? I mean, obviously you're in a little bit of celebration, but that's not you. So how are you approaching this?
No, because this isn't exactly money I'm going to cash out and use, even if I did sell this Bitcoin, right? Because this is a long-term holding that I've identified that I was, my plan has always been multi-year, long-term, see what this thing can do from that perspective. You're right, Matt. I have been holding for the better part of 6 or 7 years, in most regards. I think my first Bitcoin transactions were 2012 or 13, but mostly in 13 and 14 is when I got really excited when, you were talking about it so much. We were all kind of over that at that point. I can't imagine a timeline that allows somebody to hold through crashes finally get back up to where you're now at the highest level you've ever been, really. I know not on the daily, but we're within 1,000 points of that. We just broke out of the key psychological level that started the last bubble bursting and then dump it. That just doesn't seem logical to me. So from my perspective, I'm looking at a couple things. I'm thinking about allocation percentages. Because of the way I play it, I play it differently than Mark does in one regard. I also have Ethereum and some of the other coins, so the percentage relationship between the different coins I hold, I'm really thinking about that, and which ones I want to have focused. By the way, Bitcoin is my number one. I think it's the best way to play it, quite frankly, most direct. But yeah, maybe even potentially, riding patiently through this here. But if I was going to do anything, it would probably be add to the position, not take away from it, quite frankly.
Yeah, obviously Bitcoin, and they have every right to crow as much as they want. It's been very, very, very impressive. I've felt like this year in Bitcoin is so vastly different than what was happening in 17, though. And you had this same degree of euphoria in 17. If you guys think this is new to Bitcoin, it's not. This is not new to Bitcoin. In fact, this is less volatility in Bitcoin this year than it was in 17, than it was in 18, than it was in 16, than it was in 15. And I know for people waking up to Bitcoin in the last 6 months, you're like, oh my God, that's insane. But think about it from percentage movements. Think about it from that perspective. So it's actually less volatile, but I think it's more consistent. I think it's more consistent because having a corporate adoptable theme versus a consumer mass migration theme is vastly different, in my opinion.
Mm-hmm. Yeah. Anybody who played Bitcoin charts, it's clear, obviously, when you're on the futures chart on Bitcoin, you only get the 3 years of data since it opened on the futures market. The history of Bitcoin, we remember the other bubbles, Matt. We remember, you have different contexts when you were trading and investing in Bitcoin back in 13, 14, 15, 16, 17, before the big bubble got burst and whatnot. So it's an exciting time. And you're right.
Yeah.
It doesn't do a lot of good to crow, but Bitcoin holders have every right
you
to
never
crow.
you never want to crow, but when you've been an early adopter and things and you've had to deal with a lot of the nonsense, you have every right to crow.
Yeah. I think you had a couple of company news items, by the way. We've been talking
Tesla was one of them. Really, the first day Tesla was put into the S&P 500. Obviously, I wanted to talk about the Elon news. Just again, a little reminder: Tesla coming into the S&P. But more than anything, I just wanted to talk about the Bitcoin news. Microsoft, on the other hand, got an upgrade here today.
I got one thing
guys.
to say about Tesla.
Oh, go ahead, too.
Remember a month ago when they were making all this fuss about whether they needed 1 or 2 days to do this inclusion because it was the biggest company ever? Well, they figured it out in 1 day. Yeah, they got it done.
So silly.
So we're good. All right.
Sometimes we're all so silly.
Yeah. Sometimes
and it's like all of us, right?
Make a mountain out of a molehill.
Make a mountain out of a molehill. Microsoft caught a nice little upgrade. Microsoft has not been participating as much as some of the other areas, other stocks in the market post election. Finally showing some life here, guys. Got a pivot high off of 210, breakout of 220 here today. Obviously got some chop left of the chart here. But do you guys have interest in Microsoft here?
Man, that chart instantly makes me think the long term. I love the company. We always debate 1A, 1B, right, between Microsoft and Apple. You have to love this potential. Yeah. Breakout up here for sure. How could you not? What
Mark,
about you, Matt?
Well, obviously I'm interested. I asked the question.
Yeah.
I'm interested. I'm already in Microsoft. So it's just a matter of, do I want to add more? So, and Microsoft is not a company that I trade often. I'm an investor. I'm a long-term investor. So for me, it's, how many more shares do I need to get so I can get to, another cover call strategy with Microsoft. So yeah, I definitely love it.
Mm-hmm. And
Mark,
did
he take off?
No, I'm here. No, I didn't want to poo-poo on your end. I'm just not big on tech right now. Like from a cash flow perspective, I have like a few things I'll sell naked puts on to give me some exposure to tech. I'm underweight on tech right now. I'm probably not going to do anything major on tech until after the Georgia Senate races. So
why tech though? Like when why tech? Tech's very strong.
I know, but it's been my same thing. I've been this way for 3-4 months now, and it's just I don't know the oomph behind tech, and I've been saying this for like 3 months now. It's been a fine cash flow space, but until I see something that gets tech going, I'm just treating it as a broad consolidation pattern.
Tech's going, bro. like there's no debate there, bro. Tech's running. It's not a question of if it goes, it's a question of does Microsoft catch up?
You know, is it going the last couple of weeks? Sure, but everything in a lot of areas going the last couple of weeks. I just look at that as a broad consolidation pattern in the upper end of it right now.
Mm-hmm.
So,
millennial market, investor market are having a battle.
They are.
They really are. They really are.
And I do think that there's extra risk to tech with the Georgia runoffs. I mean, I think tech gets hit if the Dems win both seats. Now, I don't think the Dems are going to win both seats, but I just like whenever there's a sector event, I'm just going to shy away and go do something else, and then I'll come back. You know?
I know the Georgia runoff's important. Honestly, after a tough election season, I have not even cared. And I know I should, but I haven't. Tim, should I care more about the Georgia runoff?
No, I'll care when the market cares.
Okay.
Uh-huh.
All right. I'll care at the first of the year. I think the world deserves a reprieve from politics for the next couple of weeks.
At least. I mean, we're talking, it's Christmas, Mark.
It's Christmas. Stimulus is done. Obviously, our politicians wanted to go home for Christmas. That's why they got the stimulus deal. Let's all have a reprieve.
Yeah.
When I retire in a couple of years, hopefully sometime in the next 6-7 years, I'll have Christmas then. Until then, it's all trading in my portfolio, and I don't give a shit about any of your holidays. So,
oh, he went Grinch real fast on that.
Humbug.
Wow. Mr. Grinch.
Listen, Susie Boo Lou, I'm taking your presents too. So
Cindy Lou Who, I think.
Cindy Lou Who. Yeah.
Mark needs some love for the holidays.
Dude, I'm in a good mood. My account's up to date. It's a good big blah blah. I'm happy. I'm just focused. I'm dialed in.
I think what actually happened is Mark thought the show was done, was not ready to have a conversation on technology.
No, let me look at that. That's a consolidation pattern. Go to a weekly chart. It's a consolidation pattern.
I love the weekly, by the way.
I love the weekly.
The whole point is the breakout on the weekly.
I think the weekly makes the daily stronger.
Wake me up when you break out of the broad range.
All right, we might wake you up tomorrow.
It may. It's cooking today. It's up 2.5%, obviously showing some strength. Yeah, I'm definitely interested. I like it here. And really, I mean, from my perspective, it has taken so much time off, back and forth. We're very much in the same location as we were in the summertime, guys. So yeah.
I agree, but I think this needs to be said because I think Swin nailed it.
He did.
More match, Mark, less McRibs. More match, less McRibs.
Is
Everybody
the McRib gone?
Did something happen to the McRib today?
It's still delicious. Listen, I had a McRib this weekend, and some of you will gross out at this. I was carrying it, and I was carrying too many things at my garage, and it fell on the garage floor. Listen, I just picked that up.
Don't admit it. Don't admit
it. Listen, that McRib was not going to waste. So
technically, it probably would not have done anything to the actual quality of the McRib.
So just give it a little extra flavor.
The man's eating a McRib to begin with. We can't judge too harshly that he ate it off the ground.
If you think that this market can go down as long as McDonald's selling McRibs, then you do not understand the economy.
All right.
We will end on that one.
On that, let's start getting final thoughts. Emily, wonderful to have you pop in here today, by the way. I did not get a chance to watch the recording on Women in Trading yet, but how'd the event go on Friday?
Oh, it went fine. We, we talked about, just kind of like a year in review of 2020 and, what we're kind of looking at in 2021. And I was just kind of having like a broad conversation about, a lot of people obviously with what happened in 2020 got spooked in the market and maybe got out and never got back in. And maybe now they're wondering where to put their capital and what to do with it. And we were just having a discussion about, there's really nowhere else to get your money to grow and compound, because you're not going to get it from interest rates in your savings account or any other place for that. And so you're really left with a few choices, whether it's real estate or the stock market. Yeah, we know that these areas are overvalued, but even the most conservative investor has no choice but to come and look at these areas of the markets and invest. So we talked about planning for long term for 2021, and how to start to get into the markets if somebody is still spooked about it, or not sure how to go about it, and just kind of talked about those ideas. So you just kind of came up with an agenda of what to do next year, and just start to get your feet in there and do something. Otherwise your money is just not going to grow anywhere.
Mhm, mhm. Yeah. And I'm getting a lot of feedback here in the chat as well, that it was a great Women in Trading. Linda says she loved it. So I'm glad to hear that, Emily. Yeah, that's cool. That's cool. Marky, final thoughts from you.
Listen, Matt said it earlier. I'm going to today, while kind of that one-off algo-driven pre-market recovered day is a good reminder that don't be over-leveraged, be responsible, be happy making money, put your systems in a real clear, I'm going to run this and I'm not going to be this crazy over-leveraged trying to make it all today. Markets can swing. You're going to make money in the markets. You're going to be a successful trader. Don't do anything that can derail that. And greed and over leverage and a million out of the money call options, those things can get you. Just be careful, be responsible, and you'll find success. And today's a good reminder of that.
Mark, I'm going to sum up the chat for you. Not a lot of McRib fans out here in Team Tackle world, so, or they're being very quiet. Maybe the McRib fans are just shy.
They're shamed. They don't dare publicly admit their love of the McRib.
I could care less what
I think McRib fans are not. They don't care about shame. They've been
I'm
shamed
selling
their
naked
entire
foot
lives.
on SPACs, and I'm eating McRibs, and it is a good way to end the year. I know that.
Fantastic. All right, Maddie, final thoughts from you, sir.
No, I think, like Mark said, I mean, it's a little bit of a gentle reminder that volatility is still here. And that, like I said earlier in the halftime show, if you've been popping call options like it's going out of style, you might want to adjust a little bit, be a little bit more conservative, tighten up those stops, make sure you're getting confirmation, tighten up your systems and make sure you're being systematic here. And I think that's what today reminded me of personally, is that at any point this market can get you. And you just got to be aware that these days like today, they're going to happen, and they're going to happen more often in the future than they have in the past. So it was just a gentle reminder, but that's what it was, and it was nothing more than that.
Mm-hmm, mm-hmm. Yeah, and it's also a reminder to me: do your job, money manage. Understand your routine. Go through it a step at a time. Volatility did pick up here today. We've got a lot going on from a news perspective with stimulus and all the things around COVID. But guys, at the end of the day, focus on execution, focus on your job, and stay positive as we're heading towards the end of the year here. It is a shortened trading week, guys. We'll be back for the halftime report tomorrow for a full session, and Wednesday for a full session as well. But shortened sessions on Thursday and Friday around the holiday. We will not have HTR, so just be aware of that. But let's focus on today. Let's focus on tomorrow. We got
real quick, Tim, on Christmas Eve and Christmas, obviously Tackle Trading is going to be taking the holidays off. We will not have any of our content that we typically have on Thursday. Obviously Friday, everybody has off, but more than anything, guys, enjoy the holidays this week and next week, and stay safe, enjoy the holidays. And it's been a tough year for a lot of people. Let's enjoy the last couple weeks of it.
Absolutely. All right, guys, we're out. We'll see everybody tomorrow, same time, same station.